Most Australians who invest in real estate fail to achieve their goal of creating a large and sustainable property portfolio. Over 2 million Australians own an investment property, but 70% of them have just one property and another 18% have two. So that's 9 out of 10 with just one or two properties. Those who own 5 or more are less than 1% of the total. Here's why so many people fail to achieve great success. Basically, it's because they're herd animals. They lack the ability and mindset to think and act independently. Now, that less than 1% who have a portfolio and a decent crack of success at property investment, they're the people, the minority of people who have a plan and are willing to invest in information and advice to make good decisions. And are generally are able to take action where most people are adopting a wait and see approach. They accumulate good real estate assets and they keep them. They make their next purchase when they're ready to add to their portfolios, regardless of public sentiment or the tone of media or the trend with interest rates or the alleged state of the property market. The successful investor thinks and acts regardless of all that white noise in the background. Indeed, they love periods of uncertainty and generally negative sentiment, such as the first half of 2023. They recognise that this is a good time to buy because most Australians are sitting on their hands, discouraged by negative media, high inflation and higher interest rates. Now, that person, that investor who thinks and acts independently, is very much the silent minority. The noisy majority comprises those who are driven by sentiment, by media soundbites and by RBA board meetings. The independent thinker sees opportunities where others see problems. While many people have been spooked by rising interest rates, the independent property investor recognises that it's still possible to achieve good investments that pay their own way because there's a chronic shortage of rental properties and rents are high and rising. So a smart, well-researched investor also knows that property tends to thrive in times of economic disruption. In uncertain times, people fall back on the highly dependable bricks and mortar. Now, this happened when the pandemic struck in 2020, and we saw a spectacular property boom contrary to the forecast of the economists. And it's happening now in 2023, despite 12 interest rate rises and high inflation, also contrary to the predictions of the big bank economists and others like them. Now, the key factor for the successful investor, those rare individuals who do this well, is that they understand this very simple and important philosophy. You build your team before you build your portfolio. What that means is that successful investors understand the importance of having a team of experts around them. You need an accountant who understands real estate matters. It's useful to have a lawyer who can advise on important matters like the best entity to buy with. A good mortgage broker can advise on the best loan deals, a good source of expert independent research data, a quantity surveyor to advise on tax deductions from depreciation, mentors who have experience with real estate investment, and a good buyer's agency which offers genuine expertise and the time-saving service of finding the best properties that suit the investor's criteria. Successful people treat property investment as a business and understand that in business you have to spend money to make money. That means a willingness to spend money on advice, expertise and information to provide the best chance of making the right investment decisions. Those who penny pinch and refuse to engage with experts often end up making poor investment decisions and become one of the 90% of investors who never get beyond 1 or 2 properties. They tend to be the wait and see people who miss the best opportunities to buy well ahead of major growth phases such as occurred in mid-2020. People who say they want to wait and see what happens with interest rates or with the next election or the next ABS data on inflation usually never take action at all. They are left behind by the independent thinker who sees the opportunities that exist in markets across Australia amid all that economic disruption in 2023.